Welcome to our comprehensive GBPAUD analysis report, covering the period from October 6th to 11th, 2025. In this video, we'll dive deep into the British pound versus Australian dollar currency pair, examining key technical indicators, market dynamics, and critical price levels. We've analyzed data from multiple premium sources including TradingView, Investing Live, Action Forex, Forex.com, and Daily Forex to bring you the most accurate and actionable insights. Whether you're a day trader or a long-term investor, this analysis will help you understand where GBPAUD is heading and what levels to watch. Let's get started. Our analysis draws from 5 authoritative Forex data sources to ensure comprehensive coverage. TradingView provides real-time technical analysis. Investing Live offers market commentary and news. Action Forex delivers expert technical insights, while Forex.com and Daily Forex contribute additional market perspectives. As of October 14th at 11:20 GMT, GBPAUD is trading at 2.05738 Australian dollars, showing a positive daily change of plus 0.53% or plus 0.01091. The pair opened at 2.04648 with a previous close of 2.04647. Today's trading range spans from 2.04462 to 2.06542, with volume at 73.64 thousand ticks, indicating healthy market participation. Let's examine GBPAUD's performance across multiple timeframes. The 1-day performance shows a gain of 0.53%, while the 5-day period reveals a stronger 1.02% increase. Over the past month, the pair has gained 0.93%, demonstrating consistent upward momentum. However, the 6-month performance shows a decline of 0.99%, indicating some medium-term volatility. Year-to-date, GBPAUD is up 1.75%, and the 1-year performance is particularly impressive at plus 6.28%. This chart clearly illustrates the recent bullish trend, with short-term gains outpacing longer-term performance. The positive momentum across most timeframes suggests growing market confidence in the pair. During our analysis period from October 6th to 11th, GBPAUD displayed notable volatility with an overall upward trajectory. October 10th was the most significant day, with the pair surging 1.72% to close at 2.0642, marking both the period's highest and lowest points with a range from 2.0240 to 2.0642. This dramatic intraday movement of over 400 pips signals strong market activity. The following days showed consolidation, with October 9th declining 0.29% to 2.0293, and October 8th dropping 0.22% to 2.0353. October 7th saw a modest recovery of 0.10%, while October 6th opened the period with a slight decline of 0.17%. The chart visualization clearly shows the sharp rally on October 10th, followed by a pullback and stabilization phase. This week brings critical economic data releases that will significantly impact GBPAUD. On Tuesday, we're watching the RBA meeting minutes alongside UK labour market data, particularly wage growth figures, which are crucial for Bank of England policy decisions. Thursday delivers Australian employment numbers and UK GDP figures, both of which could trigger substantial volatility. Looking at the UK pound outlook, the Bank of England's Monetary Policy Committee remains divided, but hawkish voices are growing louder, emphasizing price stability despite weak consumption. For the Australian dollar, the Reserve Bank of Australia is taking a cautious stance with no rush to cut rates further. Australia's economy is regaining momentum with stronger consumer spending, though slower employment growth creates uncertainty. Cooling US-China tensions are providing support for the Aussie dollar. Current market sentiment favors the AUD in a risk-on environment, while policy divergence between the RBA and BOE is creating attractive trading opportunities. Let's break down the critical news affecting both currencies. In the United Kingdom, wage growth has fallen to a 4-year low as demand for workers slows, signaling weakening labor market conditions. The upcoming autumn budget. 2025 is drawing significant attention for fiscal policy direction, while the Bank of England's Monetary Policy Committee shows a hawkish tilt despite internal divisions. On the Australian side, the Reserve Bank is maintaining a cautious stance with no urgency to cut interest rates further. Business activity held steady in September, consolidating just above long-run average levels, indicating economic resilience. Market speculation suggests the RBA may be done with rate cuts for now. Importantly, cooling U.S.-China trade tensions are providing crucial support for the Australian dollar at the start of the week. Overall market sentiment currently favors the AUD over the GBP in a cheery risk-on environment, with the stronger U.S. dollar impacting both currencies. Trade war concerns continue affecting risk appetite, while the potential for monetary policy divergence between the RBA and BOE is creating compelling trading opportunities for informed traders. The technical picture for GBPAUD is overwhelmingly bullish. Our comprehensive analysis of TradingView's technical indicators reveals a strong buy rating, with 16 indicators signaling buy, 9 showing neutral, and only 1 suggesting sell. Breaking this down further, oscillators display a buy rating with 3 buy signals, 8 neutral, and 0 sell signals. The moving averages paint an even stronger picture with a strong buy rating, 13 buy signals, 1 neutral, and just 1 sell signal. Key oscillators show the RSI at 54.97 in neutral territory, stochastic at 78.00 also neutral, and the CCI at 163.64. The momentum indicator at 0.02363 is showing a buy signal. Among moving averages, the 10-period EMA sits at 2.04556 with a buy signal, the 50-period SMA at 2.05635 also signaling buy, and the crucial 200-period EMA at 2.04337 confirming the buy signal. This technical consensus strongly supports the bullish bias. Understanding key support and resistance levels is crucial for trading GBPAUD effectively. Using classic pivot point calculations from daily price data, we have 3 resistance levels and 3 support levels. Starting from the top, R. 3 resistance sits at 2.12501, R2 at 2.08449, and R1 at 2.05872. The central pivot point is positioned at 2.04397, serving as the key reference level. Below the pivot, we have S1 support at 2.01820, S2 at 2.00345, and S3 at 1.96293. Currently trading above the pivot point, GBPAUD has room to test the R1 level at 2.05872 in the near term. A break above R1 would open the door to R2 at 2.08449. On the downside, the pivot at 2.04397 should provide initial support, with S1 at 2.01820 serving as a stronger safety net. These levels will be critical reference points as the pair navigates upcoming economic data releases. Let's define the trading ranges for different time horizons. For the short-term outlook of 1 to 2 weeks, GBPAUD is expected to trade between 2.0240 and 2.0650. The lower boundary at 2.0240 represents a critical support level identified as a short-term bottom with bullish MACD convergence. This level must hold for the bullish bias to remain intact. The upper boundary at 2.0650 marks key resistance, and a sustained move above this level would signal continuation of bullish momentum. Currently trading at 2.0574, the pair is positioned in the upper half of this range, with a mildly upside bias. For the midterm outlook spanning 1 to 3 months, the projected range extends from 2.0000 to 2.1000. The psychological support at 2.0000 aligns with the S2 pivot point and represents a major floor for the pair. The resistance at 2.1000, specifically 2.1003, is the confirmation target where a break would validate a longer-term bullish trend. The 55-day EMA at 2.0524 is another critical level where sustained trading above would affirm the bullish case and attract more buyers. To wrap up our comprehensive GBPAUD analysis, the pair maintains a mildly bullish bias, supported by strong buy technical signals with 16 buy indicators versus only one sell. A short-term bottom has formed at 2.0240, positioning GBPAUD for potential upside continuation, though this is contingent on key economic data releases from both the UK and Australia. Critical levels to watch include support at 2.0240, which must hold for the bullish bias to remain intact, and resistance at 2.1003, where a break would confirm a longer-term uptrend. The 55-day EMA at 2.0524 is also crucial, with sustained trading above this level affirming the bullish case. The short-term trading range is 2.0240 to 2.0650. Looking ahead, key catalysts include the RBA meeting minutes and UK labour market data, Australian employment, and UK GDP figures, Australia's Q3 CPI data later this month, and the evolving policy divergence between the Reserve Bank of Australia and the Bank of England. Our technical rating stands at strong buy, with 16 buy, 9 neutral, and 1 sell signal for the analysis period of October 6th to 11th, 2025. Thank you for watching, and trade safely.